All righty. Doc here from North America. Good morning, good afternoon, and good evening. Let's get the chat line up. Let's see what's going on today. You can see dollar index looking fine. Just a little dip. King dollar seems to be king dollar. And it's now. I can say this about all of that in a very simple way, and that is, it's interesting with our new, the I guess, Secretary of Treasury, who's a currency trader, and this is, without a doubt, Dukaskopi and Swiss Bank are into currencies, without a doubt. This is a currency conversation we start off with, and what influences currencies. So, that's going to be, that's lifting, let's say it's lifting the stock market across the planet. I don't think China is doing too well over it. They just labeled 29 companies that use slave labor. And since our socialists find slave labor to be okay, as long as it's working for them, I guess it was okay. But, for, free markets and free people, we kind of think you don't reward slave labor. That's the way we look at it. So here we are, and there's the dollar, and it's showing just a little weakness there this morning. You see the little red dot. You see the histogram, though, is plus. We're in a weekly buy. It's not marching along in a negative way. And this is a short week in the United States because this is the week of Thanksgiving. This is kind of like, as much as they say 1776 is the birthday of America, I guess this is the marriage. If 1776 is the birthday, then Thursday, Thanksgiving, is the celebration of the marriage of America. That's before the baby. Back in the old days, it was before the baby. I mean, you can have babies without being married, of course, but this was, a third attempt of settling here in the New World. The United States, they had Jamestown, which was the first. I mean, we all know about in 1492. Spain kind of gets a little vicious and crazy, and a fellow from Spain takes off to try to find the New World. And he lands in South America or the Caribbean islands. I guess he lands in the Caribbean islands, and they call it that's why they call it the West Indies today. And that was Christopher Columbus. And then there's they sail, I guess, in 1602 or 1601 which is like literally over 100 years later. They sail into North America. And they land in where today is Virginia and Jamestown. And right behind them is another group that lands in what is known today as Philadelphia. They land across the river called Gloucester. And that's like 1608, 1610, something like that, 1612. And then they land in 1618 into Massachusetts, and they're called the Pilgrims, and they land in Plymouth Rock. They land outside of Massachusetts, Boston, and this week is our celebration of that. So Thursday, markets are closed here in the States, and banks are closed, and families get together and they eat turkey. And people travel all around the United States to get back to their home, no matter where they're working. A lot of them always try to travel back. And then we have a half a day on Friday. I myself have no problem doing my webinars. I enjoy talking about the markets and so forth, so it's nothing abnormal to me. So in America, matter of fact, my weekly signal ends on Wednesday because the market is so, dedicated to the holiday. It's the most dedicated. I mean, the 4th of July, it's the summertime and we're happy and we're celebrating and fireworks and picnics and so forth. And in November, it's cooler out, and it's in a lot of parts of the United States, and there's snow on the ground in some places and so forth. It's an indoor thing more. We do ours in a greenhouse. I might show you a picture of that. So anyway, that's what our week is, how it's starting off. That's how we're looking at it. Let me see what else. Let me just double check the sound. Okay, good. Sound is good. Everything's moving along. And so let's take a look at, there's the dollar index. So you can see, let's see what interest rates are doing. Interest rates have a great influence on currencies, and also the inflation and the growth of a particular country has, influence on currencies. It's not just, there's a currency and let's buy it and sell it. It's a lot more to it than that. It's not that complicated in some aspects when you really think about it, but there are a couple things that influence currencies, and it's always good to look at them. And let's take a look at the 10-year bond, which is kind of like an indicator, like VIX's volatility index, to the health of a country. When your interest rates are enormously high, it's very expensive to borrow money. Obviously, that's not a good thing. That's a bad thing. So there's the 10-year bond. And you can see the 10-year bond has been trying to lift. Let's make a clearer picture of it right there. You see it's been trying to lift, coming off. Remember, when bonds go up, interest rates are going down. And we showed you that on, I think it was Friday. We were showing you that combination of where when the Federal Reserve lowered interest rates back here, okay, back in this spot in, where's September? Right up in here, they lowered the interest rates right up in here. This normally would, see how this is going down? Normally when they lower interest rates, it goes up. It doesn't go down. But the price of the bond fell apart because the bond traders, which is the biggest market in the world, and then the second largest market in the world are currencies, and then like the third largest market in the world are energies, and then like the fourth largest market in the world is metals, and stock market comes right behind that. So, there's a pecking order of size. And so if you compared the bond market, the largest market in the world, compared to the stock market, probably one of the smallest markets in the world, relative to each other, what you would get is that if you were looking at it like the difference between objects, let's say like a car or compared to a truck, or let's say a house compared to a skyscraper. That would be the best way to look at it. Sometimes I say it's more like the Earth compared to the sun. The bond market is the sun, and Earth is just this little small object compared to it. And that's, you could do it on an earthly way and say, okay, you're looking at the size of a table or a chair, and you're looking at the difference between that and a skyscraper that's 100 stories tall. That's how big of the market is. It's an enormous market. So in the price, when you're looking at the price of the bond and it's going down, it means people are selling it. They're not buying it. And so if interest rates were dropping, you would be buying the bond because you expect interest rates dropping and price of bond going up, like what was right there. And that's, the bond traders basically said, the Federal Reserve, we've seen the miscalculation of the Federal Reserve a few times over the last 4 years with Mr. Biden and Mrs. Yellen and Mr. Powell. They've made mistakes, enormous mistakes actually, and the stock market, which is a very small market, is a place to run to when mistakes are being made like that, because individual companies compared to individual countries, perform differently. So just thought we'd lay that in there before we take a look at the prices here. So there it is right there. You can see the bond been dropping, but lately it's found a bottom and it's turning up. Now, when did that bottom really develop? What's the date on that? That is November 15th. You can see there is the election right there. November 6th. They slammed the price of the bond down and then turned right back up again over a 2-day period. Then they slammed the bond down again, and now they're driving it back up to the election day right there. You see we're getting close. Now that's the 10-year bond. Let's take a look at the 30-year bond, which most countries pay attention to a 10-year bond. We in the United States for a long time always watched the let's see, where's that? Let me go like this. We watched the 30-year bond, because mortgages were based off of that, but now they're basing them off of 10-year bonds. And let's go take a look at the 30-year bond. Because I'm so, I've been trading the markets for so long that I'm used to more of the 30-year. I remember when the 30-year wasn't that big a thing, and it was the 30-day and the 60-day and things like that, and the euro bond. There's a euro bond, but it has nothing to do with the euro. It has to do with American money outside the United States in Europe, and the cost between it. Now you can see here the 30-year is going into a sell for the last couple of days, and it's in a weekly sell. It's still pushing down, but it's also trying to lift up overall. You'll see the same type of bouncing with that drop like the 10-year did, and there's the election right there. And then you can see it, climb back up almost to the election day, then fail again, and it's just, there's the election day itself right there. So you can see it's trying to climb back to that line right up in here. So, and the currencies, when we drift over to, say, the euro itself, there it is right there. It's trying to make that bounce. You can see, what was that? That is the 14th. You can see the election day, as soon as Mr. Trump got elected, the bond, the interest rate market, and the currency market bought dollars. Excuse me. Excuse me there. And you can had a little sneeze going on. So you can see the euro sold off from the election right there. And the dollar was bought. This means when it's going down, the dollar is being bought and the euro is being sold, and vice versa. When it's rising up, the dollar is being sold and the euro is being bought. That type of thing. So here it is. What we have here now. We have a nice bounce there on Friday, and you can see again today showing even more strength, just a little more strength. And the euro is gaining against the dollar, and then we go back to the let's put that in there. Let's go put the let's put the dollar index in there, which is the 6 currencies that make it. Right there again, and we'll go back to it. There. Now that's interesting. As you can see, this thing is trying to lift up in a couple different ways, and we'll see how that really starts to turn. How's it going? And this is the what product is this again? This is the dollar index itself. It's just been climbing, and I guess all the way back in September, when the Fed in this area here lowered interest rates, the currency market said, "No, it's not working. You've done it wrong. Whatever you're doing, stop doing it." And you can see the dollar was bought, not sold. And so you can see it's up in here. It's spiked. And we're going to show you also the crypto market. Let's show you the crypto market. The Bitcoin in particular. We'll go to that right there. You see Bitcoin doing that same adventure. There it is right there. Late September, they started seeing that Mr. Trump was going to win, and they are expecting to see a stronger dollar, and they got it. And there's that's the election day right there. He gets elected, and Bitcoin goes from 75,000 to today it's trading in almost the $100,000 area. You're talking about a 25. What's that? Is that that's a 25% move Is that 25%? That's even more. It's like 30 some odd percent move. It's a third, almost a third of it up. I guess it would have been a third. It's like 28% move, that type of thing. Pretty good there. And now now that the stock market, I guess what it is that the level of responsibility again of controlling inflation, being more responsible with money, being more productive, watching companies grow. Maybe, we've seen Turkish lira. Let's go over to the great experiment. It's a perfect example. A lot of it is more of, I think, the weak euro. But look at that. In September, they did the same thing right there. They topped out the euro against the Turkish lira. And you can see it's been moving down. That's a really good thing for it hit that bottom of the range that we've been watching, and a little bounce out of it there. But we fell down from the 39 to the, what is that right there? That's 39 or 38 and a half. We had a couple days where we're just all that 38 and a half, 39 thing going on. There's a high of 38.44. And it had that one day where just, these things are real trades here. These are not fake trades. These are not bad trades. This is where a certain amount of size comes in and it can't be satisfied in normal range, which is an enormous normal range to begin with. But, this is a chart of inflation. That's what this really is more than anything else. This is a chart of bad governing. That's what that shows. This is... You don't wish for your currency to go from 1 to 39. It's like we looked at it. We've looked at other countries. Look at Poland, a very responsible economic government. And you can see here the currency fluctuates between the 4.25 all the way up to 4 point. You can see on the screen here back to the whole year. The range was between 4.45 and 4.25. Yeah, 4 point, not 43. Okay? And when you look at the Turkish lira in the same time period, let's see if we can get that up there. There's October, December. Let's see. We got to crunch it down a little bit more. And out of the same time range... Going back to January, the Turkish lira was trading at 32, not 4.4, but 32.4. 32. And by the end of the year, it had made its challenge all the way up to 40. And now we're trading at 36.3. So not 3.3, 36.3. So this is like watching the VIX, the volatility index. This is showing you responsible governing an economy versus irresponsible governing an economy. Obviously, whatever. That's why we call it the great experiment. They're doing all kinds of wonderful experiments, chopping hands off, taking off knees, cutting ears off. They're taking parts of the body and ripping it off, basically. This is not good. This is not even remotely good. Okay? And then when we go to Poland, another country, I would think that Turkey's got to be a bigger, economy. I've never really looked, but Turkey's, I think there's only like 15 or 20 million Poles, So you see this, it's 4.28 or 25 there with 4.4 there over the same time period. This is what's responsible looking. Okay, let's take a look at the euro the same way. The euro is, impressive too, the same way on a responsible level. It has taken it hard on the chin of late. It was trading in January at 1 point. What is that? We'll just give you the close. 1.09. Like 1.10. Nothing. Small. Just like the euro. As a matter of fact, the Turkish lira used to trade at that. Used to trade at 1. No more than like 8-9 years ago. And then Prime Minister Erdogan / President Erdogan started doing his experiments, and the next thing you know, the thing is like a rocket ship. And people were paying incredible amounts of money for all kinds of things. And you can see it drifted down to 1.06 and blew up all the way to 1.12. Believe me, when we look at the Turkish lira, we don't call it the great experiment for no reason. It's gone bananas, in a level of economic policy. And, it's just what it is. And you can see even with Mr. Trump, it's the same thing. That September move, they started realizing Trump was going to be president. And, it seems to be the trend. You had these little bounces where they got a little nervous about it, but obviously, it's still stayed incredibly small ranges compared to, the Turkish lira. And I don't think we have a currency that we watch. You can see the Swiss, look at the same time period. They started fighting inflation back a year and a half ago. Now it's almost 2 years ago. Let's see. Let's go back right there. So there's a. Oh, you're not seeing any of this. Is anybody watching anymore? What's going on here? They like to watch me record it? Is that what it is? I don't know. I don't get it. I know there's a couple hundred people coming into our video every day, but don't be afraid to talk to us and ask questions. We're glad to respond. You're not going to insult us. There are no stupid questions in trading and money. There are only long answers or short answers. Okay, so here you go. There is, the Swiss dollar pairs trade has gone from 0.84 to 0.92 and then back down to 0.84. Wouldn't they die in Turkey for a move like that? The moves in the Turkish lira are like madness. 32.00 to 40.00, not 0.40, 40 point. These are monster numbers in currency trading. Talk about even the yen, as wild as things have gotten in Japan with the drop of bad governance and so forth and irresponsible this, and they've lost political control in certain ways. You're looking at a currency that trades at 140, or I guess it's really like 1.40, and to 160 yen. You're only talking 20 ticks, really, over that time period of the low to the high for the year. 140 to 160, and then back down again to 140, and now it's up to 154. This is it's a very tight market. I guess if we were comparing it to Turkish lira, and you can see that with the euro, same thing. Very tight markets, from 1.10 or 12 to 1. In this case here, we're taking out all the lows at the moment. We're down to 104, 105 over the last couple of days, but it's only 1.04. When you go and look at the great experiment, you're looking at 36 point something and 40. It's pretty wild. Matter of fact, can you imagine if in the same action we saw this go from, I guess, let's see, how do you compare that? It's very hard to compare. It's damaging. I know Janos, who used to work for Dukascapi, basically said that he was in the bazaar in Constantinople or something like that. He said that he'd been there, I guess, a couple times and over the years. And he says that they don't even have prices up anymore. It just says ask for price. They can't even put a price on there because the changes so dramatically throughout the day. All right, anyway, that is the currency market. Interest rates govern it. That's why it works. Hey, there's Robin. Yo, Robin. Let's see. Let me say hi because I'm really confused. Is anybody? Robin says sometimes the chat line doesn't like the chat. Hi. It's really odd. Matter of fact, today I don't even see anybody up there. There's like the indicator says that there's nobody up there. Oh, now we have 5 people watching. Okay, so it fluctuates. People come in and out, over and over again. And we get about 200 and some odd people coming in and out during the webinar. But they don't stick around 10 minutes, 2 minutes, 5 minutes. They do stuff like that. And then they come back and they watch the video of it. This way they can fast forward through my crazy, you know. All right, so from there, let's go take a look at the cable. There's cable, and it's how has it acted since January? So it's basically traded in the 1.24 area all the way up to the 1.34 area, which in this case, both the cable and the euro is a reverse trade. In other words, it's GBP dollar, not dollar GBP. So in other words, when it's rising, it's gaining against the dollar, and when it's falling, it's losing against the dollar. So it's been feeling some pain against the dollar since that September move where they started to realize Mr. Trump was going to be elected. And I don't know why it says so at the January, the election there was Tories, or what I like to call Labor Light, lost power, and real labor came in. And that's why we say that. And then now you can see we're below that. And they're not very happy with labor, obviously, at this point, because people were selling the currency. Over there at the Swiss, you can see Swiss, same thing. You know, we look back into January. It's, you know, it doesn't even break 1.0. The thing is very tight throughout the whole year. You know, it's like comparing. Can you imagine you were trading between like 30? You know, let's say where Turkish lira is. I guess you could say that's like comparing it. It would be like trading from 36.31 to 36.99. Even if it was 36.00 to 36, not 38, not 39, not 34, not 32. That's way too much volatility. So, and so like the yen, it's 150 yen. The yen is a penny. You know, sometimes it's a penny. Now it's what is it? A half a penny. You know, it's lost. You know, the yen is, you know, it's like there's 150 yen to the dollar, 154 yen to the dollar, which is like the penny in the United States. So it's, as much as it looks like it's a big thing, it's not much of a big thing because they actually trade. They trade the yen dollar trades very tight. You know, it's a very tight thing. A lot of commerce. They have. They're the second. I think they're the second. Sometimes they're the largest bondholder in the United States. You know, of American bonds. It bounces back between them and China. China owns about a little under $1 trillion, and Japan owns like 1.1 trillion, and then like Britain owns like, you know, 700 or 600 billion dollars worth. You know, the United States, the Americans are the largest bondholders of American bonds. We own about 45% of the bond market. So, you know, we're the biggest holder of all. And so, you know, that's the yen. As much as it looks like it's a big number, it's not, since a yen is like a penny. So in this case here, now it's a half a penny or 3/4 of a penny. And this is also dollar yen, not yen dollar. So in other words, when you're doing the reverse, you know, it's trading at like 50 or 46. You divide that, you subtract that out of 200. Is it 200? No, 300. I think it is. 100? No, 200. So it's 200. So it's really like 0.46. So it's just underneath half a penny. All right. From there, we take a look at. We've already seen the great experiment and beat up on it as bad as we can. So there we go over to, let's take a look at New Zealand, the New Zealand dollar pairs trade. So you can see there it's trading at like, you know, 0.58. And that's, you know, it's not that outlandish, and it trades out to 0.63 or 66, that type of thing. And when we look at it over a year-to-year period, you see the range is enormously tight. You know, I mean, you know, sometimes we look at the Turkish lira or some of these active currencies, and we really don't explain them as much as we could. You can see the range for the whole year has been between 0.6, what's that, 6.4 basically there, or 6, yes, right there. That's 6.4 basically, it's barely touching it, all the way down to 0.58. So it's, you know, it's incredibly small. You know, not a full point, not even an eighth of a point. It's not even an eighth, is it? It's barely an eighth. You know, you're talking about like 10%. That's it. Whereas, like, you know, the great experiment is like a very explosive, going from 32 to not 33 or 32.4, 32.4. It's going to 40, and then back down to 36, and then back up to 40. Not 0.36, 36 point. Ugh. I can't emphasize how wide those markets are and how big they are and how scary they are. It's like, look at the Canadian. We haven't looked at the Canadian in a long time. There's the Canadian. Let's take a look at the Canadian going all the way back to July. I'm sorry, January of the beginning of the year. And you can see the thing was trading at 1.34. It moved up to 1.40, maybe a little bit more than that, 1.43. And now it's trading at 1.39 ones. Small numbers, traders. It's small numbers. These are minuscule compared to looking at this beast running around from 32 up to 40, and now sitting at 36. Not 0.36, not 0.40, but 40.0. 36.33. 32.00. Big numbers. Big numbers. Wild stuff. Wild thing. Wild thing. That's what we should call it. We should call it Wild Thing instead of the Great Experiment. Wild thing. It's a wild thing. All right. So from there, we take a look at South Africa. South Africa, they've been, let's put it this way, since the coalition government has come along, you can see it's calmed down pretty dramatically. The ANC has lost full control of South Africa. Now it's, let me just move that back. And there's basically January right there. And the currency's been up in the 19.00, fallen down to the 17.00. And this is the dollar USD-ZAR, not the reverse. So that means that when it's going down, it's gaining against the dollar. And when it's going up, like it did right here, it's losing against the dollar. So in this case here, it's trying to bottom out in here. It made a nice low into the 17, and now it's jumped back up to close to 18.5. Now we're stuck around the 18.00. A little active there, The ANC has done a horrible job. I think the currency, before the ANC, the currency was around, 3 and 4. 3 point this to the dollar, 4.0 to the dollar. Now with the ANC, it's gotten up to 18, 19, 20 to the dollar. It's going through the great experiment, just like Turkey is. Let's see what we can do with the economy and drive it totally out of its mind and punish the citizens as best as we can. And we'll vote for you again because we don't know any better. I guess that's the best way to describe it. Oh, yes, we like losing a finger. It makes total sense to us. Or losing an ear. Why not? It just makes I lose weight. It makes me lose weight. Yes. All right. And so there's the ZAR. But one of the interesting things about the South African Rand is South African Rand produces the most gold in the world. So what happens is that the country does. So it's a precious metal indicator. When we see this thing moving down like that, gold is going up. And when we see this thing moving up, gold is usually going down on a short-term basis. So let's go take a look at the metals complex. Right there. And there's gold. Remember, traders, you can ask any question you want. It does not matter to me. Anything. I don't care. Ask anything. Why is hydrogen so predominant in the universe? Whatever. All right, there's gold. You see gold, as it was up very strong this morning. We do have some issues. The center of Europe right now is got a war going on. We have a geriatric president that's not sure what day it is on any given time, was coup d'etat out of office. The United States had a coup d'etat. It was pretty interesting, very peaceful in many ways. But they coup d'etat Joe Biden, and they put in his vice president to run for president, and she lost in a landslide. because the policies themselves are very damaging. And so they hurt people. We have inflation too. We're living under the same engineering as Turkey. Let's see how much we can increase the inflation. It's only transitory. Someday your grandchild won't have to worry about it. Your grandchild. And you know what? There was at one point it was the same thing with Japan, and they started creating 100-year mortgages. They changed the law so that if you died, you could pass along your mortgage to your child or your grandchild, because of inflation. Unfortunately, Japan is a European socialist type of government, and combine that with samurai spirit, you get a very strange economy. People work for a company for life. You don't just leave a job. Once you've gotten hired by a company, it's like you've joined the army and you're staying that company for the rest of your life. They got that samurai thing going on. So at times, matter of fact, you could see they had this massive pairs trade, a carry trade, where the Bank of Japan was running a carry trade of over $20 trillion for a long time. And they just unwound it this year. And that's why the currency went from 0.7 and 8, 0.8, 0.5, and bouncing around in the 7s and the 8s, that type of thing. And then all of a sudden, it runs up to 1.6. Now, compare that to, some other countries like South Africa or Turkey. That's not too bad, going to 1.40 or 1.50 compared to 0.75. It's almost just a double. Whereas, we've seen the South African rand go from 4.0 to 18.0. It's exploded. Or we've seen the Russian ruble go from 36 ruble. Or we've seen over a 15, 20 year period the ruble go from 4.0 to 100.0. In other words, 100. Massive moves. Turkish, same thing. 1.0 to 40.0. Monster moves. Imagine you walk into a store and you paid 5 for it 3 months ago, or 7 3 months ago, and now you're paying 15. It's doubling in price. And has your salary doubled in price? I kind of doubt it. So that is the magic to watching currencies. It's interesting. You're seeing the if you want to try to understand the currencies more than anything else, you're looking at the soul of a country. It's industrial base, it's freedom of business, it's it's a responsibility of spending, less wars, things like that. Not killing your population for the fun of it, that type of thing. Unfortunately, that when we look at some of these currencies, they're very soft, kind of cool, not crazy. And then you have some of these currencies that are just running around like a mad animal. Wild thing, I think I love you. Yes, exactly. Wild thing. All right. From there, we go over to silver. And there's silver. That's the March silver contract. We're getting ready to move into the next, next front month. And so March silver is next. February gold. Matter of fact, here's February gold. Right there. There's February gold. Starting to move down a little bit. You can see it's been a weekly sell. Matter of fact, we got to put a line in there because we're going to start using this chart going into the next week. We're going to start shifting into the next spot month. Let's put that there like that, and then just go like that, and right like that. So there is February gold. It's gone into the daily buy, but it's been in a weekly sell. So in other words, it's in a neutral position if you were short it, you've been in a neutral position from the $260 some odd dollar area. Now it's run up as high as $2,750 basically, and it's just hanging around the $2,710 area. Then you go over to let's take a look at December which is the front month, just a few more days. Right there, you can see it's doing the same thing, and it's been in the weekly sell the same way. And this thing had been in a weekly buy for, I don't know, 18 months. 18 weeks, something like that, 19 weeks, and finally went into the weekly sell a few weeks back, and and this topping gig going on, and it's again it's having a responsible government. Mr. Trump is a very responsible guy, going to take us in a very responsible direction, and he loves peace through strength. So in other words, he builds big war machines and doesn't use them. That's what we call peace through strength. Build them, but don't use them. Only use them when you have to use them, not for the fun of it. Where the socialist in our country, Joe Biden's administration, is sending even more missiles to Ukraine. And they're going to start firing them. But, Mr. Putin and Kim Jong of North Korea and even X from China knows that that's a very irresponsible way to grow. You can't be bombing each other. I know Europe noticed that in between like 1914, basically 1913, all the way up to about 1945. It really doesn't work. It's just makes the day a bad day. All right, and then from there, we'll take a look at copper. Here's copper. This is the next month. This is the March contract, and and here and you can see it's been moving down, and it's in a sell since up in here. Once they realized Mr. Trumpy was going to be president, it was like, let's get out of Dodge. Because this is looking at the action. We can't really follow the currency in China, but we can follow the copper because copper is a very major equity in China. Unfortunately, the China yuan is a converter. It's not really a currency per se. It's a tool to convert currency, and it's fixed to the dollar. All right, and then from there, let's take a look at the front month at the moment right there, December copper. There's the election. Excuse me. You can see they were selling down. They realized back in September, just like everybody else, that Trump was moving into that position. There was a little hesitation, and then slammo. You get that action there. Let's see. Where do we go from there? Let me take a sip of water, too. And that felt good. All right. From there, we go over to... let's see. Where is it at? Let's take a look at copper. That's copper. Okay. Platinum. Let's go to the platinum contract and see what they're doing with that. We think of that as the most dangerous short in the world, and it's still a January contract. We've been following this. They only trade a couple contracts a year. Let me see if we can put that up on the screen and show you the way we look at that. Let's see. Here's a good way of looking at it. So, let's see. There's platinum. Let's switch screens for you a little bit. We'll show you what we're looking at here. This is the futures contracts, and you see January right there. It trades. You see there's a volume, about 10,000 contracts on Friday. Open interest is 76,000 contracts. And you can see the February contract seems to be the next front month. And then from there, it's the July contract. So, wait a minute. April, that's what it is. April's, not February, it's April is the next contract. So we're going to go from January to April. And then we'll see if July and October, maybe they do the quarter cycles, that type of thing. Then when we go look at, say, gold, there's gold. You can see December has 122,000 contracts traded on Friday, and there's 132,000 open interest right there. Now, you can see we're up to 281,000. It's twice the amount of open interest now in the February contract, and a little less than a half of the volume, 53,000 contracts traded right there. So, and then you can see, I think April gold becomes the next popular one, and then it's June or something like that. You can see the open interest, 42,000 versus 29,000 versus 7,000, 8,000, that type of thing. Actually, look at that. The December of next year is actively traded, and look at the price tag too. It's trading at $2,811, and right now this year's December contract is trading right now at $2,681. So that is basically what is that? That's almost $140 difference, is it? It's a $130 difference. So back gold is more expensive. Matter of fact, there's December of 26 is almost up $3,000 an ounce at $2,954. You see the June contract is trading at $3,027, and December of 2 years from now, is it 2 years? So 24 December, 25 December is 1 year, 26 is 2 years. 3 years from now, they're looking at December gold of 27, trading at $3,051 as we speak. Open interest is only 19 at the moment, so no one's really getting too crazy about it. And then you can see open interest in 2026 is 45 contracts open interest, so almost nobody's participating. But you can see in December of 25, a year from now, there's 8,400 contracts outstanding. So, all right, I just thought we'd show you that, and that's how we figure out who to, we follow the front month. So, and then obviously let's take a look at copper, because I don't think we did look at copper per se. And there's copper. So you can see the open interest now is still 38,000 in December, but look at the March 25. There's 111,000 open interest, and now the volume has jumped even. We're getting very close to moving into the March contract. There was 16,000 contracts traded on Friday, but in March 25 contracts, 17,000 have traded. So it's starting to leap over. So that's why we have both contracts on the screen at the moment, and we're watching the way it works. So, all right, from there we'll go back to the charts, and that's platinum, and that's the last of them. And you can see it's in a sell for 3 days. Weekly sell for, this is going on a 5th week, coming down from the 1,050 area, and we've gone down below 950. So it's dropped over 10%, almost 10%. I guess it's like 9.8, 9.7%, something like that. All right, from there we'll go to the energy sector and take a look at Brent, BZ, and we use our algorithm. That's what we do. We follow our algorithm, our proprietary algorithm. BZ. There it is. And you can see Brent today off from Friday's close. What was that? It closed Friday at 75.6. Let's say 17. 75.17. And today we're trading at 74.42 basically. So about 70 cents down. It's made even lower, like $1 down, that type of thing. And let's take a look at the algorithms. You can see the weekly. This is 2 weeks in a buy, and now it's still, it's starting the week off in a buy. We'll see how this thing starts to roll over. And you can see the daily algorithm is 6 days in a buy. So it's holding up. We'll see. Obviously, if they're pitching missiles at each other, I understand that the Ukrainians have said they're going to go after the Russian refineries and production. It's going to be like, oh no, don't do that. Not the cattle. All right. From there, we'll go take a look at West Texas crude. There it is, January crude. They trade together very closely, Brent and them. 6 days in a buy and 2 weeks. This is starting the second week in a buy, that type of thing. So, and you see it's probably dipping the same way. A little dip there. There's the high, and it broke down. It's not as low, I guess you could say. What is that? The close of Friday was $71.24, and today it's trading at $71.02. So, it's only 18 cents or 19 cents off, that type of thing, compared to the 50, 60 cents of Brent. Then from there we jump over to, let's see, where is it at? Let's look at natural gas. We're in the January contract now of that. Right. Oh, no, that's a December contract. That's right. Is it January contract up top? I think I put the Jan in. No, we haven't put the January contract. We're just on the edge of switching that one over because it's in pipeline, so they don't expire as fast as the others. They expire this week, though, I can tell you that. So let's take a look at that. There's yep. Okay. Doing that same little dip today. We'll get that switched over into the January contract going into tomorrow. And I think over on the chart that we send out is a January contract now. That's what it is. So the January contract is trading at $3.46 a cubic, and this is trading at $3.34 a cubic. Okay, they're both pretty much the same, very close. And you can see it's trying to go into the sell here, and we're getting that same thing in the January too, trying to do the sell. I'll show you there, busting into the sell there. There we go. And the weekly is trying to roll over in the weekly. Let's see what the weekly is doing up here. Weekly is, well, that's the December. So we'll put the January contract in and see if the January is starting to roll over. All right. From there, we jump over to a refined product itself. The most, as far as I can tell, I think it's the most active refined product itself, because it feeds the airplanes that fly in the sky, the trucks on the roads, the diesel engines, and at the same time, it feeds the houses in the Northeast here, and a lot of places in the country burn heating oil or kerosene or slash fuel oil or something like that. That's what we have, different names for it, but it's pretty much the same thing. And so there it is, right? It's HO right there. There's the December contract. I can get rid of that. Let's get rid of the December contract. Bink, gone. And then let's go back down to the January contract right there. Wait a minute, where's the January contract? Oh, I thought we had the January on there. Let's add the January. Let's put the other screen up, and you'll see January oil right there, hanging out in the 229 area, $2.29. It was last year, or let's put it this way, months ago, it was trading in the $3 area. So it's taken a big drop, which is, makes everybody happy. You can heat your homes a lot easier that way, that's for sure. Let's see, what are we looking for here? Wish I hadn't gotten rid of that now. I gotta find the symbol on it. What's it? H-O. Oh, wrong place there. H-O. There it is. F. Whoop. Backspace. F25. That's what it is. F25 dot NYM. And let's put that in. Where's that? Let's see. We call it heating oil. H-O. Caro. And what else? Fuel. Oil. Okay, that'll help there. All right, now let me give it permission for me to look at it. If anybody's interested in having access to this charting system, we'll let you play for it for free for a few weeks or a month just to see if you like it. Now, where did it go? There it is. Access. Ta-da! I knew it would pop up at the top. And let's go show it to you. Oh, there it is right there. Products. DocDow. And right there. There we go. You see that strength in there, just like in there. Yeah, same thing. January contract. And it's in that weekly buy too. For a second week, we'll see how long that lasts. If it starts to roll over, or maybe, it's cold out there. People need it, and they will use it. So that is that. And there's a spreadsheet there showing you that's how that works there. There's a spreadsheet. I don't think I have heating oil in there. I have crude oil in there and gold and all these other things, copper, showing you how many weeks in a buy, and it's like the results of our math for 4 decades. We show you the results all the time. The daily buy or sell, the weekly buy or sell. You see the same thing in the currencies. There's the currencies. Same situation, cable, 8 weeks and 2 days in a sell, and euro 9 weeks in a sell and 2 days in a sell, that type of thing. That's what the spreadsheet's all about there. All right, we're out of here. This is Doc from North America. We will have to put the title in too. Where's the phone at? It's around here somewhere. All right, so this is Doc from North America. We will catch you tomorrow, same time, same channel. And so, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Catch you at Dukascopy tomorrow. Ta-ta for now.